Welcome to Gen ZU, where I uncover the hidden forces shaping our world. This is the shit that you wish you learned in college. So the next phase of the changing world order is starting. After Saudi Arabia drastically reduced their use of dollars, we're seeing another massive economic shift starting to take place. Because Saudi Arabia has joined a China-dominated Central Bank Digital Currency cross-border trial, and it's called Project mBridge. This could be another step towards less of the world's oil trade being done in US dollars. The Bank for International Settlements announced on Wednesday that Saudi Arabia is now officially a full participant in Project mBridge. This project, which started in 2021, is a collaboration between the central banks of China, Hong Kong, Thailand, and the United Arab Emirates to test CBDCs for cross-border trade and payments. And they just reached what's called the MVP, or the Minimum Viable Product stage, which means this project is not just some conceptual idea or prototype. It's happening for real this time.
For real this time.
So let me show you exactly what's happening, why it's happening, and how this will affect us and our future generations. When countries trade with each other, at the center of their commodities trading of wheat and corn and energy is the petrodollar system that powers the entire thing. This system has allowed the United States to flourish for over 50 years, thanks to money flowing in from all over the world into U.S. assets and treasury bonds, which has allowed the U.S. to not only borrow money, but to sell that debt to other countries as well. That's how the U.S. has become famous for being the #1 exporter of inflation, foreign aid, in U.S. dollars.
Their #1 export is fake girlfriend.
What's interesting is that there are now more $100 bills in circulation than there are $1 bills.
$10 million in crisp new $100 bills.
But what's even more interesting is that there are more $100 bills in circulation outside the United States than there are inside of it. In fact, 80% of all circulating $100 bills are now outside the United States, and that is partially why the United States is one of the few countries in the entire world that can control its consumer price inflation. And it does that by using the Federal Reserve central banking system. It's why this week the Consumer Price Index, which is how we measure inflation, went down just like everyone expected. Partially because the US is able to give all this excess money to other countries, which out of all the superpowers the US has, giving foreign aid is the most important one.
Actual superpowers.
And now there's a new player that's challenging the old system with a new one called mBridge, which is a central bank digital currency. Now, for decades, the US dollar has held the world reserve currency status, much like the French Libra and British Pound did back in their time. But now, countries want to be less dependent on the petrodollar system, which is why we're seeing them shift their old currency into new digital currencies. You might be thinking, hold on, isn't money already digital? I use my credit cards, my mobile banking apps, and to that extent, it's digital. But not exactly. We have more or less the same system that we've been using for hundreds of years.
Same as it ever was.
Imagine this, it's the 1600s. People are using gold coins to buy things. But gold is heavy to carry, easy to steal, hard to divide, but not that hard to fake.
Go gold, he steals!
So then comes the idea of paper money, and this was revolutionary. We could deposit the gold into the bank to keep it secret, keep it safe for another time. Fast forward to a couple of decades though, and the money is spent. Now these pieces of paper represent nothing other than the debt itself. That was the 20th century when we got off the gold standard and we moved to digital banking.
Do it. It was at this moment that he knew.
This is where our money is now represented by numbers on a computer screen. But behind the numbers are still traditional banks and middlemen that have what's called counterparty risk. So let me give you an example. When you use apps like Apple Pay, Venmo, and PayPal, and you're sending money to someone, you're not sending them money in real time. You're just sending them an IOU or claims to that money. But there has to be someone in the middle of those transactions that verifies that the money you're sending is there in the first place. Those banks, they don't do that job for free. They charge us fees and they don't want to work on the weekends.
No, I hate working on the weekend.
That's the system we have in place right now. Now let's fast forward all the way to the 21st century and we get the birth of cryptocurrency. Cryptocurrencies are, of course, completely digital. They're decentralized, they're not controlled by anyone, so there's no need for a middleman to verify anything. And over time, that system grows. It turns skeptics into believers and believers into extreme advocates. Now, of course, crypto has its own problems like volatility and market manipulation, but the underlying technology that makes them work is better than the system we have today. And it's so much better that these benefits couldn't just be ignored by the central governments of the world. So they're starting to adopt them into their own systems, and that's where CBDCs come into play today. We are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access to information, and purchase goods and services. Recently, the rise of distributed ledger technology, which offers a new approach to recording ownership of assets, has allowed for the creation of a range of new financial products and services, including cryptocurrencies. A CBDC is a truly digital version of a country's fiat currency. Remember, fiat just means created by the central government, so think of CBDCs almost like another country's cryptocurrency. It uses the same technology to transfer value somewhere else. The question is, why are central governments around the world creating this system? Why are they participating in a crypto technology? And how is this useful? So, imagine there's an earthquake somewhere or a natural disaster. We can have direct stimulus relief to people during a crisis without any sort of delay, and that means no lost checks in the mail. There are a lot of different benefits to the system, but are they really doing it to benefit some people? What's the catch?
Deadliest catch is on.
The catch is that the next time a country needs to buy its energy and its oil from another country like Saudi Arabia, it won't need to rely on the old petrodollar system. In the past, if that ever happened and countries traded outside the US dollar, the US could still intervene. It could shut these transactions down immediately because everyone still uses the freeway of the traditional banking system. But this new system can exist outside of that highway. Once it goes live at scale, no more permission will be needed from US banks. That's how these CBDCs could potentially challenge the dominance of the US dollar in international trade. Remember this chart? It shows a dollar's share as a global reserve currency is at a 14-year low. And this pivot could definitely speed things up. This is where Project mBridge comes in. What it is a central bank digital currency that allows the transfer of value across the world instantaneously, very, very cheaply. And interestingly, it uses something called DLT, or Distributed Ledger Technology, which is similar to the technology that powers Bitcoin. Basically, it's a blockchain. But like all blockchains, it's limited by a law of nature. The speed of light, for example, has a cosmic speed limit. It can never be faster than 186,000 miles a second. The law of gravity says what comes up must come down unless another force acts upon it. And the law of conservation of energy says energy can never be created nor destroyed. It can only be converted. Blockchain technology also has a sort of cosmic limit in that the law says blockchains can master 3 specific things, but they can only truly master 2 at any given time. We have never created a technology that has broken this law of blockchains. mBridge is no different. They choose to master security and scalability, but left out decentralization. For global trade between countries and central banks, decentralization is not all that important. But if you're a user of the currency, a lack of decentralization comes with its own set of risks and downsides. And before I show you what they are, I just want to first show you how popular this mBridge system is becoming. So far, it has Switzerland's Bank for International Settlements. It has the central banks of China, Hong Kong, Thailand, and the United Arab Emirates testing this technology right now. And they've given access to the sandbox versions to 27 other official entities, including the International Monetary Fund, the World Bank, and the central banks of countries like Norway, South Korea, and Turkey, along with banking and development from HSBC. Goldman Sachs, and the New York branch of the Federal Reserve. There's obviously some massive players involved in the development of these CBDCs, and you can actually see this for yourself, just how much the world of money is evolving in front of our very eyes. You can go to the Atlantic Council website, which tracks the development of these currencies all around the world. So far, roughly 134 countries and currency unions representing 98% of the global GDP are exploring these right now. 44 of them, for example, are in the research phase. 30 countries are already in development. 36 of them are in pilot testing phase, and 3 have already been launched. And as side notes, Switzerland's BIS also announced that the mBridge platform uses Ethereum Solidity smart contract language and the Ethereum virtual machine. Kind of crazy to put into perspective how a crypto technology is being used as the basis for a new monetary system. The question now is, how does a central bank digital currency affect everyone, and what are the real risks? Let me break this down because it's different depending on where you live. If you live outside the US, it can be a good thing. According to the World Bank, there are 1.4 billion people that are unbanked. They have no bank accounts and no way to get a hold of these payment systems when they need them the most. CBDCs could give access to digital money to people without banking accounts. It could also lower transaction costs, which right now are super expensive. The average cost of sending $200 internationally right now is about 6.5%, and CBDCs can significantly lower these costs. If you're living inside the USA, it could also be a good thing in the same exact ways, but it could also be a bad thing because according to the Atlantic Council's prediction, it could fragment the global economy and threaten the US dollar. Remember that all economies essentially work like a balloon. This is what a normal economy looks like in its normal state. And when a country needs to solve a problem, it throws money at the problem and it gets that money just by printing it. But printing money has a side effect of inflating that economy's balloon. And you can only inflate the balloon so high and cause the prices to go up so high before people can't afford to buy anything and the balloon economy explodes. Fortunately, for the petrodollar system, it has this exit valve right here. Without the escape valve, countries around the world have had their currencies and economies collapse. Their balloons exploded because they printed too much money, and a major reason why that has never happened in the US, despite having printed trillions of dollars, is because we export those dollars to countries for their energy, global trade, and conflict. So the US money balloon is always able to deflate. In the same very nerdy analogy of mine, lowering interest rates, which is what the Federal Reserve is expected to do at least once this year in September, means increasing the elasticity of this balloon. I don't know if you ever tried blowing up a balloon, but it's really hard to do that on the first expansion. It just makes it easier with lower interest rates, and raising interest rates has the opposite effect. Also along the same lines of this analogy, a central bank digital currency that competes with the petrodollar system has the effect of shrinking this balloon's exit valve potentially to a subatomic level. To a tiny level, which means if this balloon represents inflation, it will take this balloon a lot longer to deflate back down to its original size. That just means inflation will stay around a lot longer than we want it to. And we've all seen what inflation does to our economy. What happens to affordability, home prices, asset prices, food, gas, and other costs of living items. But there's another bigger problem, and it will affect everyone that uses this new central bank digital currency system because it empowers a country or the bank that controls it with the ability to set an expiration date on money. This has happened in China before because a digital yuan has an expiration date. Use it by a certain date or you will lose it. Now hold on a minute. Why would money ever have an expiration date on it? That makes no sense. Under Keynesian economics, one of the reasons why is because it allows a government or central bank to encourage people to artificially consume. Sounds complicated.
Dang, anything else? I got a complicated order!
But think of it like this. If there is a recession or worse, a depression, the way to get us out of one is to encourage people to go out, borrow money, and spend that money. But whenever there's a recession, people are not spending money. They're saving money. They're scared of losing jobs. They're not spending money. And so how do you get people to grow the economy if no one wants to spend? You put an expiration date on it, because that's what will artificially encourage people to go out, consume, and spend their money or else they'll lose their savings. That is a massive risk, and time will tell how the superpower will be used. But it's something important to pay attention to. But there is another risk, and that's the risk of privacy. And this is one of the reasons why the US is also sitting this one out. Now, in March 2024 of this year, the chairman of the Federal Reserve said that they want nothing to do with the Central Bank Digital Currencies for precisely all of these reasons.
That we're nowhere near recommending or let alone adopting a central bank digital currency in any form. But the idea is that as technology has evolved, money has become digital. But the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how it works in China, for example. But that's not if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, the Federal Reserve would want, would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed. That's the way we're going to keep it.
So what we're seeing happening right now is a competition on a global level for the better monetary system. Even though these CBDCs empower these countries to go around the US petrodollar system, it also gives them a superpower that comes with its own set of risks, like the ability for them to monitor and control every single transaction, including controlling what's inside of your bank accounts.
Built to keep us under control.
Now, in July of last year, 2023, the Federal Reserve Bank of the US launched something called the FedNow system. Your bank account, the Federal Reserve announcing it, has gone live with its new FedNow instant payment system, a system that should allow households and businesses to send payments and receive money immediately without those troubling 3-day holds on checks and waiting for payments to clear. That system was not a CBDC. It was a settlement system for the banks, not a digital currency based on blockchain. But people are still skeptical, and rightly so. So pay attention to it. For now, data shows a US dollar is still used in the majority of all global trading happening in the world today. I don't think the petrodollar system is going anywhere based on the data that we have today. But the petrodollar system is being challenged by another system that is not perfect. It's also flawed, but it's good enough that countries around the world are accepting it, and they're testing it right now on a global level. And we are watching it unfold. We are living in extremely interesting times in the world of finance right now.
I'm looking for a man in finance. Trust fund. 6'5", blue eyes.
And I'd love to hear your thoughts in the comments down below. What do you think about Saudi Arabia joining mBridge and what that really means? What do you think about central bank digital currencies in general? And if you think this new system is good enough to challenge the old petrodollar system, I'd love to know your thoughts. Thanks for watching Gen ZU. I'm always looking to do more stories like this related to finance, exposing shadowy corporations, and economic systems that impact our daily lives. What other stories do you want to see? Sound off in the comments, and don't forget to like and subscribe.